What's up, guys? It's Cash Flow Cart, and I'm back with a video about Altria. The ticker is MO, and this one gets talked about a lot in the dividend investing community. I hear a lot of differing opinions about it. So today I'm gonna let you guys in on my take. Let's get into it. Okay, we're gonna go through a few things in this video. We're going to go through some fundamental metrics, some valuation stuff, the dividend metrics, because if you're like me, you're a dividend investor who seeks to build passive income. We're going to go through my position. I do have a long position in this one. I've had it for a while, so we'll go through that. We'll go through the biggest risk. We often hear discussed about this one. I guess we'll touch on their stake in Kronos Group, and then that'll be the video. So let's go. Okay, starting out, we're going to talk about net income. And, when we're looking at these numbers, if I can get you guys to disconnect, I guess, the underlying business, and let's just focus on these numbers, all right? Because, obviously it's important to take, a full picture of a company into mind, but with this one, I think a lot of people struggle with just because it is, a sin stock. Okay, so net income, December 2018 through the trailing 12 months, we see that uptrend. All right. There was some controversy in 2019, so they had a net loss that year that did not affect their dividend. They continued to increase it. And, that's a good uptrend. We like to see that. We'll look at free cash flow per share, and you kind of get the same story here. I mean, this one's a free cash flow beast. All right. And the reason why I like to look at this free cash flow per share amount rather than just analyzing the total free cash flow is because that's going to take shares outstanding into mind. Okay. And as a dividend investor, it's important that we realize, the trend of a company's outstanding shares, because those shares outstanding, those are the shareholders receiving that dividend. So we always want to see this free cash flow per share number outperforming, outperforming the rate of growth of that dividend, if that makes sense. Let's move on. We'll touch on margins because, obviously the margins in in something like this, mainly a cigarette company, the margins are huge. Okay, so again, if I can get you guys just for 1 second to kind of disconnect, what this company is, and let's just talk numbers in this, I guess, in this section of the video. I mean, look at this margin, 70%. The sector median's 33%. The 5-year Altria average is 65%. So, in comparison to their 5-year margin, they've actually improved, over time. So today they're doing better than they have on a 5-year basis. These are all positives. Okay. We'll look at some of, we'll go over some negatives, but again, when we're just looking at the numbers on this one, it kind of looks like it's a beast. Moving on, we'll get into some valuation metrics, and obviously this is important because even if you're getting a great company, if you pay the wrong price for it, it's going to be tough because it's going to kind of come back to its fair value and you could still end up with a loss. So yeah, again, let's look at some valuation stuff. So we'll look at the PE. We'll look at the PE multiple for Altria. It's 8.22. The 5-year average is 10.45. So, that could suggest it's 21% undervalued in comparison to the way investors have valued this one for, the previous 5 years, an average of that number. With that in mind, and, this could definitely show some signs of undervaluation, but we don't want to take anything in isolation. I also like to Where is it here? I also like to look at the price to cash flow because, obviously with PE, this earnings, you're going to have some outliers. We talked about 2019. You're going to have some stuff that, just kind of winds up as accounting, not arbitrage, but the PE can get messed up through accounting. Let's just leave it at that. So obviously I like to look at the price to cash flow. Again, same kind of story here. It's very similar to that price to earnings. Today's price to cash flow is 8.29 in comparison to the 5-year average of roughly 10.5. This could show signs of, 21% undervaluation. Okay. With that being said, that doesn't necessarily mean this is the perfect time to buy Altria, but, at least looking at it from this lens, it could be a good opportunity in comparison to, I guess, the previous 5 years of data. Let's look at some dividend stuff. And I mean, this is the forward dividend yield for Altria is 9.63%. I mean, that's pretty crazy. You're not going to see this quality of a company with a starting yield that high. And I think that's partially the reason why this one garners so much attention. They've never had a dividend cut. In fact, they've increased their dividend for 53 years and counting. So again, I mean, this 5-year growth rate, 5.85%. I think of that and I'm not really losing sleep over that because that's not even as small of a growth rate as some of these companies have. And you're getting that starting yield close to 10%. So again, disconnecting this underlying sin stock and just focusing on these dividend metrics, I think anyone can be attracted to this, but we'll look at the safety of it. And we touched on that free cash flow. Here it is. If we want to look at the actual payout ratio, it's 58%. So, obviously they have the free cash flow to support their dividend, and they have the cash flow to support increasing it in years to come. And I've watched a handful of videos about this one from other YouTubers' channels, and I often see the criticism that they are paying out too much of their free cash flow in dividends. They should be reinvesting back into the company, or they should be keeping some of that capital on their balance sheet. And I just want to give my take on that. Okay, there's two main reasons why you see a lot of these tobacco companies have, a higher starting dividend yield. And, first, I think it's sentiment. It's sentiment around the tobacco sector. Okay, this negative sentiment around, I guess, a dangerous product kind of drives price down and in turn can drive that starting yield up. Okay, I mean, that just makes sense mathematically. There's another reason too, and tobacco companies, they don't like to keep so much cash on their balance sheet because it's a lawsuit. There's a high risk of lawsuits. Okay. And, with that in mind, basically the more cash they have on hand, I guess the more they can get sued for. So to me, if you've got a company like Altria, it makes sense that they're, I guess, aggressively rewarding shareholders, for holding this one through turmoil. And, again, I have a position in it and I'm happy to be a part of this company. So, and then one other thing I wanted to maybe touch on, it's completely left my mind. I think I said 2 reasons. That was 2 reasons. Okay, let's move on. We looked at dividend metrics, valuation metrics. We're going to look at my own personal position. As I said, I do have a position in this one in my main dividend growth portfolio. I've gone ahead and shown the trades here so you guys can see that I am not I am not making this up. I've been building a position in this one for, I don't know, what is it now? I guess 5 years ish. I've been, picking up shares here and there. And I remember initially during this kind of downtrend, I was picking up some shares. I was going to see, okay, is it going to break this downtrend and kind of reverse? So we saw that. I kind of put the buying on hold. I guess, what was this? In 2021, I put the buying on hold as we saw that uptrend. And then, now it's kind of corrected and pulled back. And I've resumed some buying, some nibbling. At this point for me, the position's pretty well built out for my, personal risk tolerance. So I might continue to pick up some more shares. I guess lower the cost basis a little bit. We'll look here at Active Trader. So I've got 246 shares of this one. In passive income, that's roughly $970 in passive income from dividends annually. My average price is $44 and change. You'll see that's, $4 above, today's price. I'm not really losing sleep over that. If I want to get the cost basis down a little bit, I can. But again, like I said, I've built this position out to be, I think I'm comfortable with the size of the position, relative to my portfolio. So again, maybe I'll pick up a few here and there as we kind of see Altria in this wedge pattern on the long term. But I don't know. We'll have to wait and see. We'll have to stay tuned, guys. But, ideally, I've got this position built out and we start to see Altria kind of break to the upside of this wedge, and I'll get some nice share price appreciation, and I'll continue to enjoy that growing dividend with, I don't know, my yield on cost is probably 9%, 8.5% to 9%. So, that'll just continue to compound in the portfolio, and that'll be awesome. Moving on, maybe. Okay, let's talk about the biggest risk. And this is, everyone's always talking about this. It's a cigarette ban in the US, something of that nature. Okay, we see, the FDA proposed a menthol cigarette ban to the White House for final review. And I'll say this, guys. If we can disconnect from just one individual product of Altria, granted, a lot of their revenue comes from cigarettes. People are addicted to nicotine, okay? And I mean, that sounds kind of harsh, but that's a reality. And I don't think, at this point in obviously the US, I don't think we would respond well, as a nation to some sort of flat out nicotine ban. We saw it with, prohibition earlier on in our country's history. What happened? Moonshiners. Okay. So, when you've got these substances that people really, I guess, enjoy using, that they, I guess, make part of their routine, people want the substances, no matter how much money they're making, or, how good the market's doing, or, how good the economy's doing. If we're in a recession or something is going on, people buy the products that they want, I guess, maybe more than ever. There's a saying that's like, when the going gets tough, the tough get going. I might have just butchered that, but I'm not too worried about, I guess, some sort of ban on all products that Altria makes. I do believe this one will continue to generate free cash flow. And I will say, I don't think the U.S. government would risk sort of, spiking some sort of illegal market for nicotine products, just because, the government wants to tax cigarettes. So if people are smoking cigarettes, the government might as well be able to tax them. I think that's kind of their outlook. So again, not to say that I know for sure, but with a moat like this and a product with this sort of, addictive tendencies, I'm not as worried about anything, materially changing. We talked about that lawsuit risk, but, I guess that's a question you got to ask yourself if you can personally handle that sort of risk tolerance. Okay, moving on. 41% stake in Kronos Group, which is like a cannabis manufacturer in the US. And for me, when I'm looking at this one, I try not to price in or project anything that's not really material today. So, I kind of have that value investor mindset of looking at, current numbers, trailing, 5 to 10 years of data. And I don't want to sit here and speculate about the outlook of the cannabis market. So when I'm looking at this one, I kind of block this out of my head. I think Altria is a great valuation right now for, the products they do have that are material. I mean, we talked about their margin, and, I guess this is kind of seen as like an icing on the cake type thing. So with all that being said, guys, I hope you enjoyed today's video. I hope I could provide some sort of insights and really just show, the documentation of my journey as a dividend investor. If you enjoy this type of content, it's going to be twice a week, Monday and Thursday, kind of a vlog style video. And we're just going to talk about dividend stocks, the community in general, some ETFs. So yeah, thank you guys so much for watching. Feel free to subscribe if you want. And if not, everyone have a great rest of your day.